excited to have Jason here with us today to share a little bit about how he's helped his clients who hold digital currency and tell us a little bit about what it all is, because I'm sure we're all confused by what digital currency is. So thank you, Jason, for your time today. And yes, if you could introduce yourselves and let us know a little bit about you and your practice.
Well, thank you for having me, Danitha. I'm excited to be partnered with Libra in the area of digital currencies. What digital currencies mean to me is they provide a way for consumers and for businesses to store value and to exchange that value without having to use traditional forms of currency, such as dollars or euros or whatever. So it allows them to effectively disconnect themselves from the traditional monetary system, whether that's for business reasons, for economic reasons, for political or personal reasons. It's an exciting innovation in terms of financial services. The technology also allows innovative ways to account for and to store things other than currencies. The blockchain technology is being explored for things like deeding title to houses from one person to another, and then serving as a permanent record of that, or a permanent record of intellectual property, or a permanent record of stock transactions, or things of that nature. So that is another aspect that excites a lot of people, and me especially. My background is in audit and public accounting. My personal area of interest and area of expertise is in taxation, which is my area of focus for my tax practice, which I started just short of 2 years ago. Right when I started, I'd heard about Bitcoin, I guess initially in 2011 on an NPR Planet Money segment. And the first time I heard it, I think like a lot of people, my first thought was, this is a scam. This is dumb. Nothing is ever going to come of this. But it didn't go away, and so I entered. I started my own practice in 2013, and one of the very first things I did was start accepting Bitcoin. And the reason is I saw it as a risk-free opportunity to potentially capture a small segment of an emerging market. From there, I started to see a demand for tax compliance work and for accounting work as well, with Bitcoin as an element of the work. Back in 2013 and even into early 2014, there was a big vacuum. There was a vacuum in terms of compliance advice from the IRS, the SEC, or from any of the other big regulators in the U.S. And so consequently, there was a demand from the digital currency business community to get those services in any way that they could, to get expert advice, information about how to proceed, and basically how to handle this business that they were going into. So that kind of got me interested in more of the consulting and service providing aspect of digital currencies, and it's actually been a source of growth for my practice over the last year. I went from this time last year, maybe I had 4 or 5 Bitcoin-related clients, and maybe 3 that actually wanted to pay in Bitcoin, to now close to 100, at least for tax work. Yeah, and the most interesting thing about it is I have more people that need Bitcoin-centric work than that actually want to pay in Bitcoin. And accepting Bitcoin as payment is actually what kind of got me into this space in the first place.
Interesting. Wow. And for those that are wondering, Jason is looking to his left because that's where I'm sitting for him. So that is amazing. So now you have over 100 clients that use digital currency. That's a huge part of your practice, I would assume.
It's the bulk of my practice at this point. As you can imagine, tax preparation is a highly competitive industry. But this is a niche where I was an early mover, and where the lack of competition has given me an opportunity to shine as a CPA.
I absolutely love that. And just to back it up a little bit for those, and then we'll go into your services and how you help your clients. But for those of us that have no idea what a blockchain is or mining, what is Bitcoin? How it just sounds like magic, just fake money that just kind of poofs out of nowhere. What is it?
Okay, I'll be the first one to say that I am not a technical guy. Like I'm not a developer or anything like that. So I'm going to try and provide an accountant explanation without stumbling too much over the details. Um, so Bitcoin is created through a process known as mining, and mining is essentially uh, work performed by a computer program um, to solve a complex mathematical equation. When the equation is solved by the software, the miner is, well, two things happen. First thing is the miner is rewarded with a certain amount of Bitcoin, sort of as an incentive to operate the mine. The second thing is transactions are added to the centralized. I say centralized. It's a distributed ledger, but there's only one. There are just many copies spread out, uh, among nodes all over the world. Transactions that have occurred since the last block was created are added to a new block, which makes them part of the blockchain. Um, One of the things that Bitcoin does, and one of the things that makes Bitcoin work, is the protocol prevents double spending, which was a problem with digital currencies prior to the creation of Bitcoin. So if I have a Bitcoin and I send it to you in payment for, for your car, how does the network know, or how does the next person that I do business with know that the bitcoins that I'm sending him were not already sent to you or to someone else? And the way that works in Bitcoin is through the blockchain. The blockchain is a listing of all of the transactions that have ever occurred in the Bitcoin economy. So all the bitcoins that have ever been mined, all of the bitcoins that have ever been bought or sold or spent. Theoretically, you can track the origin of a single bitcoin back to the day that it was mined, which could have been last week or last month or potentially 5 years ago. I know that there's a lot of folks out there that are going to take exception to that explanation, but that's a back of the envelope accountant explanation for anyone who knows nothing about Bitcoin. So the thing about the blockchain technology that's I think so exciting, and I don't want to get too far afield here, is there's no reason why this distributed public ledger can only be used for Bitcoin. And indeed, it's been adopted by a variety of other, or variants of this technology have been adopted by a variety of other digital currencies and other types of assets. So I gave the example earlier of using the blockchain to deed title to a piece of property. This is something that isn't necessarily terribly exciting in the United States because we have a well-developed body of law that and respect for the rule of law in the United States. So if I buy a piece of property from you, I don't have to worry that my right to that piece of property will not be recognized by the state or by the bank or by whomever tomorrow. But this is not the case in many countries in the world. So one of the things that the blockchain empowers us to do is provide a forum to guarantee ownership of property and to guarantee that ownership against the possibility of nationalization or expropriation by a government, to guarantee it against flaws in the title as a result of improper transfer or failure to pay or anything like that. So that's, I think, where this technology is going in the long term. Bitcoin is kind of like a sideshow in the digital currency revolution. But that's really what excites me the most about this technology, and what a lot of times you'll hear people referring to when they refer to the blockchain are these other applications beyond just Bitcoin, beyond just using it as a means of payment and a store of wealth.
I think that was a great way of explaining it, and it sounds like it's just making the whole process of exchanging value, so currency or money, just completely transparent, and anyone, I would assume, has access to the ledger, so they can track where these payments originated and who is actually holding the digital currency at the moment.
Well, transparency is kind of a function of the system that has been built. It's not necessarily the goal of the system that's been built. You know, the main thing is that I can prove that I own something and that you don't, and that no one else can access the thing that I own besides me. Bitcoin is cryptographically sealed, so if your Bitcoins are stored properly and you maintain reasonable standards of data security. I mean, the encryption is good enough that I've been told that it would take years and years to be broken by the average user, and would require so much in the way of resources from like a government level user that it wouldn't be worth it. That's actually one of the downsides. I think the transparency aspect is one of the negative aspects of the system right now. That you can peer into any wallet address, and if you know all of my Bitcoin wallet addresses, you know how many Bitcoins I have, so you know my net worth in the Bitcoin universe. That's not necessarily something that most people are looking for, but you are correct. It is a transparent system.
Interesting. Yeah, and I love that you brought up the way it's changing how other countries may operate as well, from an accountant perspective, and as well as just an ordinary citizen who may not be filing taxes or helping others file their taxes, rather. Can you speak a little bit to the transfer of money and how digital currency is changing that process?
So if you want to transfer money from yourself to a person in another country, say, you basically have a few options to do that. Of course, the easiest option would be to put cash or a check in an envelope, or really just cash, because a check wouldn't necessarily work, and put it in the mail. And 8 to 10 days later, potentially, your cousin or brother or whatever in Central Africa receives that money. It's not very efficient. It takes a long time. There's high risk of theft. So what's the next thing you might try? Next thing would be a bank wire. You head down to your bank, assuming you have a bank account. Some 30 to 40% of Americans are unbanked, and that's in the United States, which is a wealthy first world country. So assuming you have a bank account, you can go down to your bank and you can initiate a wire transfer abroad. And the charge for that is typically in the $25 to $50 range, higher in some cases. And then there's a charge on the receiving end typically. Now, that requires the recipient to have a bank account, which again may or may not be true. If we're talking about developing countries, especially if we're referring to a remittance, that person probably is not going to have an account, so the bank wires out. So then the next try after that would be Western Union or MoneyGram or whatever. Without belaboring the point, I think we can understand that there are difficulties when it comes to transferring money from person to person, even across a large country like the United States, but especially across international borders. Not so with Bitcoin. With Bitcoin, if I have a Bitcoin wallet and you have a Bitcoin wallet, and we both have access to the internet, we don't even have to have necessarily computers of our own. If I have access to the internet and you have access to the internet, then I can send you wealth in the form of Bitcoin nearly instantaneously and without fees at any time and to any place. Now that there are some logistical challenges in terms of turning that Bitcoin into your local currency or whatever, but the meat of that transaction has occurred. I have transferred wealth to you without having to ask anyone's permission, and it happened instantaneously, and we didn't have to pay anyone in order to do that. There's a lot of potential there. Like I said, especially for developing countries. There are countries in Central Africa, Southeast Asia, Central and South America where remittances form a substantial part of the incoming revenue stream for those countries. And if you look at the skim, if you will, by the financial services providers that are facilitating those transactions, it's high. It's a considerable amount of money. When you're talking about billions in remittances, and Western Union gets, 3 to 5% of every penny that's transferred wherever, you can see how that starts to build up. And again, we're ignoring access concerns or anything like that. So for these kinds of scenarios, Bitcoin has a lot of promise. And we've seen over the past year or so considerable number of technologies roll out in parts of the world that are underdeveloped that empower these people to accept Bitcoin using just a basic cell phone. Not even an iPhone or anything like that, but just an old style Nokia analog, or not analog, but with just a little screen or whatever, where you can actually send Bitcoin or receive Bitcoin using SMS. You can do that now, and not that Bitcoin was the technology that made that happen, but Bitcoin certainly contributed to that and made it possible to happen cheaply.
That's amazing. I actually did not realize that you could send it via SMS. For me personally, it's just so exciting. Part of my family lives within Western Africa, Liberia to be specific, and the possibility of just leveling the playing field is what it's really about, I think, with Bitcoin, specifically digital currency for sure. To be able to send money to my family there is just incredible. And to bring it back to the States, I work with clients across the country, and sometimes it is the toughest thing to transfer money between us, and we're within the same country. And to have something as little as, I was just tipped on Twitter the other day, $10 in Bitcoin so I could get a mimosa drink. Instead of someone favoriting my tweet, they said $10, which just blew my mind. It totally made my entire week, to be honest. That's where we're going with this technology.
Well, yeah, and from an entrepreneurial perspective, I am a small business owner myself, and it's really nice to be able to send out an invoice, especially during busy season when I'm just crushed by taxes. So I send out an invoice, and I let the client know, please review your return. I need you to pay me before I can file the return. We like to get paid, when we do the work.
We do.
And with the Bitcoin clients, I know that I've been paid right away. I mean, I see it. They say, okay, I paid you, and I see it. I get a text message on my phone that says that the payments arrived in my wallet. I don't have to wait 3 or 4 days for my payment processor to process the payment, and then for my bank to credit it to my bank account. I don't lose any fees. I do lose something to the valuation. When I exchange Bitcoin to dollars, I do occasionally lose something there, but I also occasionally gain something there. But it is really nice, to know that there is a way that I can get paid right away, and more or less hassle-free. And accepting credit cards and checks is still the standard, but it certainly isn't instant, and it certainly isn't hassle-free.
Certainly, especially with checks. And yes, as a small business owner, cash flow is so difficult at times to maintain. You can have a steady stream of clients, but if they can't get the payment to you for another 30, 45 days, that could mean a difference, a huge difference, actually, within your business.
Well, Bitcoin doesn't make them pay quicker. It just, it just gets the money quick to the recipient quicker.
That is a good point. Yeah. So it might be your clients that's the issue. Otherwise, if it's the process of them getting the check or the credit card information to you, that could be solved with Bitcoin. Yes. And so to transfer, you brought up gains. So you could sometimes gain money when you transfer it to USD or US dollars rather, or sometimes you lose it. And that is the area that tax accountants will live in with their clients that are using Bitcoin or another form of digital currency to, yeah, that's the area that they need help with. Can you speak a little bit to that piece about how you help your clients with the capital gains recognition or capital losses?
So in February of this year, the IRS released a technical guidance notice that classified Bitcoin as property rather than currency. And for anyone who hasn't seen that, it's IRS Notice 2014-21. If you pop that into Google, it'll come right up. What that means is that Bitcoin and other digital currencies, the IRS actually uses the term virtual currencies, are treated the same as a share of stock or a house or a piece of property or any other property that would typically be subject to capital gains tax in the hands of a your average taxpayer. That's challenging for most individuals, and here's why. The proverbial transaction, or the holy grail of Bitcoin as a means of exchange, would be the ability to go down to the coffee shop on Monday morning to buy a cup of coffee. I scan a QR code with my cell phone, transfers Bitcoin, pay for my cup of coffee, and I'm good to go. It's a seamless transaction. Okay. Well, with Bitcoin as property rather than currency, every time you do that, that transaction is reportable, and there's a requirement for you to track and declare capital gains or losses or whatever. So if you're using Bitcoin as a means of payment on a regular and continuous basis, you end up with essentially trading records that could run into the hundreds of pages for a year if you're doing this a lot. So how do you get these right? How do you produce this? How do you maintain this? Most people don't maintain the records. And which is where I come in from a tax accounting perspective, and where I have the biggest issues with providing clients with good service. There are some tools out there that are available to assist. My favorite is actually LibreTax. I can take client records and I can just dump them into Libra, and Libra does the work for me. I have done it manually. I don't like it. It's really time consuming, and like I said, the problem is that most clients just don't keep records that are adequate for that level of reporting detail. So yeah, does that kind of answer your question, I think?
It does, absolutely. I think, I don't know if most people know that Bitcoin is treated as a property as opposed to a traditional type of currency. So I liked your example of comparing it to stock. And
yeah, I really don't like the term property, because that's not, that term is not really a very precise term for income tax reporting purposes. Technically, if I have currency in my pocket, that is my property. So, the term property includes currency. But in this context, the term property means specifically not currency. And just a little background for anyone who has been following this for a considerable period of time. Prior to IRS Notice 2014-21, there were two schools of thought about how Bitcoin would shake out. One school of thought was that Bitcoin would be treated as a foreign currency and subject to that kind of regime, which is a much easier regime from a reporting perspective. Every foreign currency transaction does not get reported. As anyone who has ever traveled abroad knows, you're not reporting every single time you buy a cup of coffee. And then the other option was property. The difference between the two is that the property classification would provide access to the long-term capital gains rates, which for some people can be as low as 10 or 15%. Whereas the foreign currency route would be easier from a reporting perspective, but it would generally be taxed at the ordinary income rate, which for most Bitcoiners would be like 25% plus. So the IRS picked property, and the rest is history. So it does create some problems from a record keeping, and then by extension a tax reporting perspective.
Absolutely, and you did an amazing article with William Perez on about.com, kind of highlighting how difficult it is to keep these records straight. And as someone that's not in accounting, that's not necessarily what we do anyway. So when it comes to something that's a little bit more complicated, it can be really difficult and a huge challenge to keep on top of those changes.
Yeah, and not everyone keeps perfect records. Most people don't, in fact. And if I'm looking at a client's records and he's missing, a paycheck, or he's missing a donation, or something like that, it's probably going to be fine. It's going to generate a result that is suboptimal for the client, but that client is not going to go to prison, or usually suffer any kind of serious consequence because they keep poor records. With Bitcoin, on the other hand, especially with business owners, it can be a real problem, because if your records are not complete, it might as well be like you have no records at all, because you're required to track basis. If you're missing transactions, it throws off your entire basis calculation. A large portion of your business may actually be denominated in Bitcoin. So if you don't include those Bitcoin records when it comes time to do your taxes, it's not like you're just leaving out a small sliver of the business. It could be like you're leaving out a third or a half or 3/4 of your business from your tax return. And that omission may not even be intentional. A lot of times the client simply doesn't know what they need to do from a record-keeping perspective, and when it comes tax time, they end up with this. They end up having to scramble to try and throw something together, and that thing ends up being incomplete. So I think the biggest takeaway, or the most important piece of advice that I give people who are looking to adopt this in their businesses, and then also as a personal investment, is keep good records from go, because you can never recover after that. If you don't do it from the beginning, you will be hobbled forever.
Oh my goodness, yes, because it builds on top of each other. Like you said, if you forget one step, you've just thrown off the rest of the calculations. So can you talk to us a little bit about, this is sponsored by LibreTax, and we did not pay Jason to say that he loves LibreTax, but can you tell us a little bit about how LibreTax helps you keep track of those gains or losses?
Yeah, and can I tell a little story first, because I kind of want to qualify that Libra remark. So I was not paid to say that. My association with LibreTax started approximately 12 months ago, which was about maybe 4 to 6 months before Libra launched as a beta test product. So Libra contacted me to ask some questions about tax compliance. I regularly receive questions from business owners or from individual digital currency advocates, asking questions. And as a general rule, I answer them. I don't really charge for that or anything like that. So it came to my attention that this product was in development. and I signed up to participate in the beta test, and the product worked. I would say not exceptionally well, but really well from the very beginning. And at the time that I signed up for the beta test, I actually had tax returns on my desk with Bitcoin data in them, and I was really struggling to come up with something that I could put on a client's 1040, which is the client's tax return. So Libra was like a godsend for me, because I had all this data. I was trying to work through it manually. It wasn't working, and it was, it gave me a way to parse that data quickly and efficiently, put out the capital gains calculations for me, and then also produced something that I could pair with the client's return as a PDF and submit in electronic form rather than having to hand key every single one of these transactions, which is what I had previously had to do earlier in the tax season. So when I tell you that I'm an advocate for LibreTax, it's not that I'm a paid spokesperson for LibreTax. It's that I've used LibreTax, and it has helped me in my business a lot. And it's now even better than it was when I first used it. So I'm really looking forward to having it available to me during my busy season for 2015. I forgot your question. I wanted to tell that story because I think it's important. It is a very powerful product. It works exactly as advertised, and I haven't been able to pay for it yet. I keep asking them to charge me. I don't know if the beta test is ongoing, but every time I send feedback, I'm like, man, I would pay for this. I would pay like a lot for this. So whenever you just let me know whenever it's time to start paying, because I will.
Awesome and great. No, thank you for sharing that. That answers my question. I love hearing how technology helps accountants service their clients, but it also gives you time back into your own life so that you can, possibly do other things outside of your practice as well, or help your clients with consulting. I noticed that in addition to tax filing, you also consult with your clients about Bitcoin. Can you tell us a little bit about those types of services?
Yes, I provide implementation consulting for small businesses, startups, and entrepreneurs for digital currencies generally. Usually that means Bitcoin. Doesn't always mean Bitcoin. There are many business owners out there that have heard about digital currencies and they want to use them in their business, but they're not really sure how to go about doing that, or they know how to do it because they're Coinbase or BitPay or whatever. There are some pretty robust solutions out there now. There weren't a year or 2 years ago. So they may know how to do it, but they don't know necessarily how that fits in with the rest of their activities. So how do they account for their Bitcoin transactions? How do they report them to the IRS? What if I have clients that pay their employees in digital currency, and what are the implications there? Do I still issue that employee a W-2, or do they get a 1099, or is that really income because it's not paid in dollars? The answer is yes, it actually is income. It still is income. Normal rules all apply. So, the basic issues that you would expect for a business owner to encounter during the startup phase, except from the perspective of digital currencies.
That's awesome. Yeah, so you're really helping them grow their business and figure out not just the tax filing, but really how to strategize the different pieces of their business as it relates to accounting.
Mm-hmm. Yeah, in general, I deal with small businesses, startups, and entrepreneurs. That's my area of practice, and I've seen a lot of businesses put out of operation for reasons that were unrelated to their business model. And what I mean by that is they didn't get the payroll tax right, and the IRS caught up to them, or they didn't do they didn't collect sales tax and they were supposed to, so the state caught up to them, or whatever, and so a business that was otherwise a promising and developing operation gets shut down prematurely for want of just a little bit of advice. So I try to, that's the gap that I try to fill, to empower business owners to stay open long enough for their concept to work. And I think that's a good niche, and I really find it rewarding to see someone become successful, and sometimes in spite of themselves. But but yeah, so it's a rewarding niche, and I really enjoy it, especially as a small business owner, because I get to talk to someone every single day that's the person who is the decision maker. I never have to deal with gatekeepers. I never have to deal with secretaries or underlings or anything like that. Every client that I talk to is the guy who is going to say yes or no on behalf of that organization, and that's really an exciting environment to work in.
That is amazing. Yes, accountants. I think the trend in the industry is to move towards that trusted advisor role, and to really be a partner for your clients, so that they aren't just talking to you come February through April or January through April. Once it's all said and done, you can really be a partner with them throughout the year to help them grow their business, and maybe in spite of themselves, but at least you're supporting them in their dream, whatever that looks like for them. That's
yeah.
really awesome. And so a couple last questions. For a tax accountant who's interested in possibly doing what you're doing and differentiating themselves, growing their practice, what would be your number one tip for them to get into this space of digital currency?
Well, the first thing that I would suggest is to educate yourself well. This is a community that revolves around technical knowledge. I admitted previously that I'm not a tech savvy accountant. I certainly, I'm capable of using the computer and so forth, but I'm not the person that's going to sit down and engage you in a long discussion about development of the Bitcoin protocol, or coding a new accessory feature for Bitcoin. So certainly that's not the expectation, but you do need to know enough about what's going on in this space from a technical perspective to not alienate potential clients. There are also technical features of digital currencies that have bearing on taxation. So if you didn't know, for example, that that a Bitcoin is not cashed out the moment you receive it, you wouldn't necessarily know that there are two components potentially to the taxation of any given transaction. There would be the point when you receive it, and then the point when you dispose of it. So the point when you receive it would be reportable as income, and the point when you dispose of it would be reportable as a capital gains transaction usually. So if you didn't understand basically how the protocol works, then you wouldn't necessarily know how to calculate those kinds of gains correctly. So that would be the most important thing. After that, I would say just keep an open mind. This community is very libertarian oriented in most ways. There is a sound business use case for digital currencies, but there are lots of people out there that are using them for reasons that are totally unrelated to that business case. They're using them for ideological reasons, for political reasons, and being a tax protester doesn't necessarily mean that you're not going to file a tax return. So you may get those clients, and I have. So being open-minded about the things that are going on in the community that are not accounting related or not protocol related, I think is also very important to being able to relate to a potential client and sell business services to them.
Exactly. I love that. Yeah, you brought in the fact that some people are using this for reasons outside of business, and it is important as accountants to be innovative, open-minded for sure. Definitely innovative if you want to stay relevant within this industry and this space. And for those that, if a small business owner is listening to this or an entrepreneur, how can they best find you?
Well, if you Google me, I am the very first one that comes up when you Google Bitcoin accountant or Bitcoin consulting. Um, my firm is called Jason M. Tyra, CPA PLLC, which is just my name. So, that makes it easier. And so yeah, if you just Google my name, I'm all over the place when it comes to Bitcoin. You can see my work for Bitcoin Magazine or CoinDesk. My website will come up, and then my personal blog, www.bitcointaxblog, will come up as well. So you can see everything you'd ever want to know about Bitcoin taxation, probably, and then some. And then contact information comes up as well.
Fabulous, cool. And Jason is also on Twitter as well. So if you like to tweet, he's definitely there at Jason Tyra, is it?
It's Tyra CPA.
Tyra CPA, at Tyra CPA.
At Tyra CPA, yeah.
Fabulous, cool. Yes, this is awesome. Thank you so much, Jason, for sharing all of your knowledge and expertise. Is there anything that you wanted to touch on?
No, I think we've been very thorough today.
Yes, lots of good information. It's such an exciting space, and I think this will be definitely appreciated within the accounting industry and to anyone that wants to learn more about digital currency.
I hope so.
All right. Well, thank you, Jason. Have a great rest of your day. Bye.